The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Good morning, everybody. Tom O'Brien coming to you live from TFNN, and it's Tuesday morning. We got a relatively mixed market to start things off. Looking at Dow off about 8 points, Nasdaq up about 12 points, and S&P's relatively flat. Gold contract down a bit, trading at $12.69. Good morning, Tom.
Welcome back, Tom. How you doing?
Doing well. Good to be back. Good to be back in this cool Florida weather.
Yeah, we got some cool weather the last couple of days, no doubt, man.
Gotta love it, man. Gotta love it for sure. So, what are you looking at in this market, man? We got a little bit of everything going on. We got the Fed meeting starting today. We got possible new Fed chair on Thursday, I'm hearing, right?
Yes, the announcement, exactly. You got Google, Facebook, and Twitter that's going to be testifying in front of Congress at 2:30. That's going to throw some action into the NDX 100 more than likely this afternoon. Yeah,
and of course, I'm sure people are seeing the headlines that I think one of the major points that's going to be talked about when at least Facebook, and they seem to be at the forefront of what's being discussed, is that something like 126 million people were able to see the posts coming from, the pro-Russia propaganda. That'll be quite a number. That'll be talked about, especially when you consider there's something like only 134 million people voted in the election, 126 million people were seeing them, and those don't match up, but staggering numbers, and that'll create some headlines for sure.
Well, and one of the things that have been out here for a while is that they were saying first that we took $100,000 in ads. We both know from having that nice little station up in Nashua, New Hampshire, that, guess what? They didn't take in $100,000. They might have been taking in $100,000 like every 10 minutes. That number, we'll find out what that number is really going to be, and it's not going to be $100,000. I would agree.
Yeah. But one just to come back a bit, I mean, the reason why people love Facebook is because you can get a better quality, exposure for your dollar. So it doesn't mean that they had to spend $100 million, to be fair. But they definitely got the exposure that they were looking for, having 126 million people see their posts, regardless of what they spent. Pretty staggering.
No doubt.
Yeah.
And if we go over to the NDX right now, even when you were doing the update, the NDX was up pretty good this morning.
Yeah.
So right now, let's see the strength versus the weakness inside the NDX, and there we go. So the strength out here is Mondelez. Now that's been down big. That came out with numbers. That's up 6%. You got Micron Tech up 5%. That's a big number. Wynn Casinos is up 4%, and you got Western Digital up 3%. Taken away from it, Qualcomm is getting smoked. That's down 7.5%, while $4. They're saying, I guess Apple saying that they're not going to be using them in their new phones. Okay, so that's going to be pretty intense.
For sure.
Alexa Pharmaceutical is down 5.5%. You got Hasbro down 2.7%, and Vertex is off 2%. So Hasbro, just as Mattel, they're both having some troubles out here. Interesting.
There's a lot of competition about what kids can do to keep their energy besides buying dolls and toys these days, right?
Oh, man, there's no doubt.
Yeah.
And Under Armour. Look at Under Armour.
Yeah.
Under Armour, this is pretty intense, folks. So Under Armour's down $1.90. You're trading out at a price point of $12.88, and this has been a one-way ride. I mean, Under Armour in April of 2016 was $46. It's breaking lower, and it's breaking lower pretty heavily.
It's not stopping. Yeah, and
it's not.
Their numbers, I mean, let's pull it up. I had it up. Let's see, the company trimmed its profit and revenue expectations for the full year on Tuesday, citing difficult backdrop in North America, its largest market by sales. They recorded revenue that fell short of the expectations. They came in with earnings per share of 22 cents, adjusted versus 19. Revenue of $1.4 billion versus $1.5. That's a big miss when you look at this and by, $100 million when you're only supposed to make 1.5. Percentage-wise, that's huge. But it's that full year guidance saying the whole next year is not what everyone expected it to be. And that's a tough retail market, man. And maybe Under Armour just doesn't have the brand awareness that some of those other companies have, like Nike, to be forging deals with the likes of Amazon. It's tough, though. You know, I look at it, I mean, Under Armour is a recognizable brand to almost everyone in the country, I would say, at this point. So how far are you going to fall when you are an established competitor to the likes of, you know, Nike, Reebok, Adidas at this point?
Yeah, I think it has to do with, you know, everything's so expensive. And it's like, are there knockoffs now that you can get that, yeah, it doesn't have the brand on it, but, like, is it not, you know, $40 for a shirt? Right?
Sure. No,
you know?
For sure. And the other tough part, right, is you have the stores like Dick's closing, the sporting goods, some of them, you know, and I'm sure they represent a large share of the Under Armour retail sector in terms of where those products are getting sold. And I agree, they're expensive items, you know. They're expensive items just like Nike is expensive items, but maybe that's where they just don't have that brand loyalty that some of those other larger brands do at this stage.
Yeah, no doubt. So let's go over and take a look at the gold market. So you get the dollar right now up 76 ticks, which is not huge. Gold is getting smacked, though. Gold is down 830. So if we take a look at what we have happening out here in gold. Okay, so you've done 159,000 contracts. You're coming into, you know, the gold market has been testing these lows. It tested them 3 separate times last week. Well, it's going to need a lot more than that. You come in at 363,000, and you got 160, and more than likely this is still left over. Well, this is pretty cool actually. This is coming into actually where we went topside on Friday, and what that was, Tom, is that at 10 o'clock in the morning on Friday, it looked like that the probability went higher that it was going to be Powell who was going to be the Fed chairman versus Taylor.
Okay,
The market kind of dug it. They kind of said that, okay, that's status quo, still, you know, dovish compared to what Taylor could be. So we'll see how that shakes out, but that's just backing into that strength, and it does have lighter volume at this particular point.
There's a lot of action this week. So you got the 2-day Fed meeting. There won't be a press conference, right? And a hike is not expected, so they'll have a statement. Is that tomorrow at 2:30?
Yes, tomorrow at 2, yep.
2:30, all right.
Yeah.
And then you have jobs numbers on Friday. Again, just that quick.
Right.
And then you have a new Fed chair on Thursday. With some earnings in the mix, a lot of action.
And then the housing numbers come out this morning. So, you know, year over year, folks, nationally, real estate went up 6.1%. That's nationally. That's a big number to take the whole country.
Sure.
20 cities that they always gauge is up 5.9%. Seattle, so check this out, folks. Seattle was up 13.3%. Las Vegas, 8.6%. San Diego, 7.8%. Imagine, you know, and in Seattle, you know, of course, you're talking Microsoft and you're talking Amazon.
Sure.
And it's like they're going up 13%. They're going up 13% on a monster number. So jobs are important. Big jobs are really important. No doubt. Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now down 8. NASDAQ is up 11. S&Ps are up 1. Gold's down 780. We have the note market down 2 ticks and the bond market up 5. Tommy and I come right back, folks. Stay right there.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tom and Tommy O'Brien. We got Dow currently off 2 points, trading at 23,346. NASDAQ up 14 points, 67.13. And S&P's relatively flat, up less than once, up 1 point, trading at 25.73. And who do we have? We'll jump to it. We got our man, Mr. Kevin Hinks. If you don't check it out, folks, swim lessons right after this, 11 a.m. You can check it out right at the front page of TFNN. Pull it up on your mobile device, wherever you can watch it. Great education, great traders talking about the market every day. Kevin, good morning.
Good morning, guys. How's everybody doing?
We're
doing great.
Doing
Kevin,
good, man. Ready for
All right.
earnings, ready for Fed chair, ready for Fed announcement, ready for jobs on Friday. What are you looking at this morning?
Just a huge week of not only earnings, as we're, you just said Facebook. Is there a bigger company than Apple? Are there two bigger companies that we're going to watch earnings on than these two? I don't think so. But you've also got Janet Yellen talking about rates, and at the end of the week, you've got the non-farm payrolls and unemployment. So what a monster week of data.
Just a little bit to talk about, right? For sure.
Exactly.
For sure.
Kevin, the Facebook and Apple, I mean, this is going to be really intriguing because both of them are also coming out before the futures close at 4:15. So, you get some real action, after the market also.
Right, and listen, that's going to drive, I always love to watch what happens right as these earnings come out and the moves that these stocks make right as the earnings come out and trading them. So, I mean, I just, like I said, Tom, I love this time of the year. It's just the best because every day is something new. Right, it's just something that's gonna. It's such a current events trade right now going on, right? Because each day you come in and there's new names to look at. That you're almost not looking at the overall market. You're looking at the individual names and how they trade.
No, it's so true. And I saw you got that nice little credit on Amazon on that number. That Amazon was amazing what happened there. That market move was unbelievable.
Crazy. And that's why trading risk defined is so important, right?
Yes.
Think about anything that had risk in it in terms of an Amazon trade. If you had any upside exposure in Amazon at all, that's a big number. Right? And think about the expected move was only about $33, $34 for that move. And it comes out, multiples of that. So it's just, these are just amazing times. Watching the market maker move, understanding what that means in terms of, the expected move in the underlying and what that means for applied volatility. It's a lot of information that we're loading traders up with.
I was on vacation last week, and so I didn't have my eye on the market.
I saw your pictures.
You did. Perfect. That's right. Enjoy that sunshine and that beach. I wish I was back there this morning, but that's all right. This is good, too. Market action. And what was funny was, so I wasn't tuned into the market as I normally would, and maybe I was on Facebook, maybe I was just on the internet. I can't even remember where, but what kept popping up? Jeff Bezos, richest man in the world. And I'd say, wait a second, he wasn't too close to that mark, and I had to pull it up, and I said, oh, man, look at Amazon. Of course, they come out with earnings, and it jumps $100, of course.
Yeah, if he was anywhere close to the richest man before that, he clearly is now. Because, man, that stock, what a massive move.
1122 the high yesterday. Quite a number when you think that it had just been hovering around 1,000 for a while, and that was a big number. 1122 in no time.
And like I said, Tom, what is there to slow down Amazon right now?
Right.
I frankly, other than government intervention, I don't see it.
Right. And when he gets in the drug business, which he's going to, they're licensed in 12 states right now, wholesale drugs, right?
Right.
People are going to love him. I mean, the bottom line is that drug prices are going to go down. He's going to basically disrupt that whole business. And guess what? I don't think anyone likes drug companies, man. Everyone pays a fortune for them, and you know that. Yeah, really? Well, you're going to find out competition when he gets in that business, man.
That's right. Now, just ask any politician, is it popular when you talk negatively about high drug prices? Yeah, well, it is, right? I mean, that's why politicians use it as their talking points so often. So you're going to get that absolutely from Jeff Bezos and Amazon.
Yeah, there's no doubt.
That'll be interesting. There's a lot of markets that are ripe for a little bit of disruption, and it seems like Amazon, when they can make billion-dollar bets without even worrying about if they lose, right? As long as they're just a profitable bet in the long run, that's quite a company to contend with.
And what better sector than the pharmaceutical and healthcare, right? And you're seeing that. That's why CVS did what they did. So you're going to see more shoes fall. You watch. I don't think it's over yet. Right, because when if we've learned anything in the last couple of years is when Amazon gets in your market in your sector, things are going to change.
We got to keep them out of the financial services industry sector.
Just ask these retailers how that's changed.
No, there's no doubt. And what's intriguing is that I don't think they'll go after Amazon as quick as they're going to go after Google and Facebook for advertising, because
I agree that you're right.
The businesses that go in are monster businesses, and there's big competition. They're just disrupted and bringing prices down.
Yeah, so, I would agree. That's why they completed that transactional Whole Foods so quickly, because guess what? There's huge players in that supermarket business that, there's competition. Just because they can't compete isn't the same thing,
Right. The only red flag that could come up in something like Amazon is margins and federal antitrust, things like that, because if they're doing it for no profits, then somebody's gonna get involved,
which they love to do, maybe, right? That's how they get in, for sure.
So they have to be real careful with. But besides that, even that's kind of a thin excuse, frankly, right? If they can crush the margins down very low but not zero, no one has a case against them.
Right, I agree.
Right.
Yep.
Right.
Folks, every trading day here, right, 11 to 12 Eastern Standard Time, your swim lessons, okay? What Kevin and the team does is that they set up strategies, and you can learn so much every day in this type of situation, meaning in earnings, though. It's amazing what you can learn, because Kevin's laying these trades out every day, and their strategies. And their strategies versus they might have a slight directional trade inside of that, but it's really cool understanding what strategy you can do, and when you see these bigger moves, you're going to see, okay, you might win some, you might lose some, but the strategy itself is so cool, Kevin, when you set these up. Particularly, I was looking, sometimes you get more calls and puts, as you're laying those spreads out, and you really can learn so much. And in this market here, it's awesome because in a half hour, you can learn what you'd normally learn in 2 or 3 weeks.
Right. Right. I mean, and there's a lot to learn. Today, we're trading EA.
Nice.
Right? EA,
oh, yeah.
That's the maker of Madden and NHL and NBA and, all those. So we're trading that stock today. Earnings after the bell today.
Perfect.
And that's trading 117 right now. Yeah,
video games, technology.
Yep, video games, right.
Gotta love it.
Who doesn't, even if you don't own the stock in video games or play video games, if you have children, you've bought video games.
And guess what? If they want to know the market, they should start with video games anyway. This is like one big video game. That's all we do anyway, right?
What it's turning into. You're exactly right.
I mean, it's really intriguing, no doubt. Well, listen, man, you have a great one, a safe one. Of course, we look forward to the show, 35 minutes. It's a beautiful thing.
Tommy O'Brien, thanks for having me on.
Thanks, Kevin.
Okay, Kevin. Have a great one, man. Have a safe one. Right now, market-wise, folks, we get the Dow Industrials up 6. You get the Nasdaq up 15. S&Ps are up 3. Gold's down 730. We have light sweet crude flat, $54.07. 10-year note, 124.31. 30-year bond, 152.17. Stay right there, folks. Tommy and I come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom and Tommy O'Brien. So all major indices positive as we stand. S&P's up 1.7, Dow up about 6, and NASDAQ up about 13. So what have you been looking at this morning? You doing any trading on that Nadex platform? I know you were.
I am.
Oh, look at you had Bitcoin up there as well. We can talk
no,
Bitcoin first.
We're gonna do both. Okay. So check this out. This is pretty wild. So in the Nadex platform, and of course, folks, if you haven't test drove this platform, great time to do it. You can come over to our website at TFNN. You hit the banner on the side. You can bring up the platform. And you can walk along with us as we trade these defined option contracts. So this morning, the NASDAQ has had an incredible run. There's no two ways about that. Looking out there this morning, I got into the largest spread. And one of the main reasons is that the spread we're talking about is the 61.80 to 62.60. And I was selling that spread. And it had to do with that. The NASDAQ was weak yesterday. It was popped $21 this morning, but more so because of 2:30 this afternoon.
Okay.
I suspect that, those are great companies, so there's no two ways about it, but they're going to get hammered, man.
Sorry, you said 2:30. Are you talking about 4 o'clock? You said 2:30?
No, 2:30.
Oh, with testifying. I was going, there's earnings. Okay, sure.
Exactly. Yep. 2:30 with testifying. So I sold the... let's see, I sold this 80-point spread. I sold it at approximately, let's say, 8:11 this morning. So, we'll see where it shakes out. But the risk versus the reward was pretty good. Let me see. I was in at 62.41. So if we put that 62.41, I was risking like... was it 41 even? Let me just see what 41.3. So I was risking 187 to make 613.
And sorry, it's just the font's a little small is what we're seeing here. I can't see. What does the contract go from?
The contract goes from 61.80
to
62.60.
Okay, so 80 points. So that's
the
per
80
contract.
Point spread.
Okay, nice.
Right. So we'll see where it shakes out. But
hey, like Kevin was saying, almost in the Amazon trade, having defined risk with something like that going on is a good strategy to have, I would say, because you don't know what may come out in terms of just maybe that number isn't even as big as we think it's going to be. Maybe multiple posts were being showed to hundreds and of millions of people, which is a staggering number. And they were asking the Den, is that Americans? Is that worldwide? And that's an American number that's being reported, and we'll see what comes out. But they were targeting, and you can target down to the city, let alone the state, let alone Americans, and those ads were being placed for American eyes, is what I would expect only. They weren't paying for eyes outside of the country as they were trying to swing some influence. So we'll see what they have to say, for sure.
That's for sure.
Yeah.
Okay, now let's swap gears for a second.
Okay.
Bitcoin. This is a monster, folks. Okay. In fact, I wish I knew this, but we'll talk to Kevin about this tomorrow. So the CME.
Yeah.
The CME come out this morning, and they are going to have Bitcoin futures, and guess what? They're looking to put Bitcoin futures up, folks, within the next 60 days.
Yeah, by the end of the year. That's not bad.
Yeah. So, of course, that sent Bitcoin to another high. The Chicago-based giant in trading products, including futures of the S&P, oil, and gold, want to reduce contracts by the end of the year pending regulatory approval. And what that just did, folks, I can't even picture. I'm telling you, this is going to be crazy. Folks, futures in themselves, okay, are good vehicles, okay, but they move very quickly, and you can make a lot of money or lose a lot of money very quickly. I can't even imagine, Tommy, like on a Bitcoin, okay, the spread in Bitcoin, I would say, is bigger than any other vehicle that I've traded. Meaning, you don't have the S&P move like this. You don't have oil moves like this. Maybe a couple times a year. Do you know what I mean?
Definitely the volatility for sure.
Oh,
Yeah.
Unreal.
Yeah. It'll be interesting, too. I saw the end of that article talking about, once you have futures pricing, then you can have exchange-traded funds because you need a basis price to kind of be working off. And, you see the multiple different exchanges that trade Bitcoin, and there's not, one of the things that had come out before is that there wasn't an easily discernible, agreed-upon price of a Bitcoin. You were close.
Yes.
But there were different exchanges had different prices, and maybe that has to do with the reliability of those exchanges versus the premium you're paying on one exchange versus the next. But now if there's a futures market, there's an easily peggable price, and once there's an easily peggable price, you can do a lot more with that in terms of maybe then you can have ETFs, maybe then you can have options, because there's one price everyone can point to that they agree upon, and that provides more as well, which might not even be that might be the bigger thing of all. So
it is.
Yeah,
I'd agree. There's no doubt that will be the price. I mean, even market-wise, the CME almost prices everything.
Sure. No, for sure. Yeah.
That's pretty intense, man.
That is
really
intense, for sure.
It's like, oh my God.
You want to trade some Bitcoin options? Why not?
Yeah, well, we're going to talk to Kevin Hinks. Yeah,
that's right.
I think that, that's where the implied volatility is going to be so important to understand exactly, what is the implied volatility, and we basically defined risk.
You're going to be paying up for those options. That's what I would assume. It's not going to be like an S&P option with the VIX at $9.50. If there was a comparable VIX to a Bitcoin, that VIX would be, what, 75, 100, right? That's what for sure, because anytime you can move 10% on a daily basis, which is not much. You're talking about 10% even at 62.50 is a $620 move. If anybody follows Bitcoins, that's possible, man, one way or the other. So those options you're going to have to be paying premium, and maybe that's where you start getting into that options market, and like Kevin and Scott are talking about, absorbing some of that premium, right? Maybe that's the strategy as you get in there. Either way, defined risk. Can't go wrong with Bitcoins. It's pretty staggering, man. Pretty staggering. I was having a conversation with John Jameson, who is Larry's friend, who did a workshop. So he's actually going to be joining us tomorrow morning for a little chat on our show, because he's doing another presentation with Larry in November. And Larry was talking about this last week before Bitcoin, and it's talking about cryptocurrencies. So John does a lot of work with them, trading them in particular. But, what I was, and we were just talking, and one thing interesting, we've talked about it before, is, I was saying cryptocurrencies are here, they're around, they're going to stay, but who's going to be the winner, who's going to be the loser, right? What if Bitcoin falls off the map? What if Ethereum takes over? And one thing that he kind of pointed that could be possible, and maybe we'll ask him about it tomorrow, because it got me thinking, is, what if Bitcoin becomes kind of a mode for transport, a mode for basically transactions for all different cryptocurrencies. So maybe that's like the store of value for cryptocurrencies, as in, it's so mainstream that if you're going to buy Ethereum, maybe you're able to buy it using Bitcoin and you're transferring. So maybe Bitcoin becomes like the US dollar of the Forex market. Interesting to think about. I hadn't really thought about it that way.
And there was a chart. I'll see if I can find it right now. There's a chart that Bitcoin has one half of the market, the other 8 have the other half of the market.
And the market's still so tiny, though, when you talk about the grand scheme. We'll be right back,
Tommy and I come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Tom and Tommy O'Brien looking at a market positive. What's new? I'm back. Market's green. Amazon to the moon.
Yeah. Let's go look at a couple of those big dogs out here. So Amazon, we're at 11.03. You know, it's down $7. Big deal. What is going to get intriguing here is that, you know, these monster gaps, they like getting filled. Doesn't have to get filled for a couple months, but that's going to be a danger point in Amazon, because the gap is from 982 to 1,050. It's like, oh man, that's pretty amazing.
I know you like to say gaps like to get filled, but when you're going to conquer the world, maybe there's some gaps that might just get left in the wayside.
Yeah, they can get left in the wayside for years. I mean, they can. They can. Yeah, there's no doubt.
Well, they could get left in the wayside forever too. Just it doesn't. I know you're implying forever. I mean,
yeah.
You know, there's anomalies to everything. I'm just saying, if there's going to be an anomaly, it might be Amazon taking over the world. That's all I'm to be wary of. What was just the consensus when they came out with those earnings? I didn't even really get a chance myself. I'm sure everybody else even listening.
What they did, they made, like, oh my God, I forget what the number was, but let's say they're supposed to make 20 cents. They made $1.20.
Oh, so it was earnings?
Like, yeah, it was over the top.
Okay.
And then what they had a long list, and the list that they had about the businesses that they're in, and every one of them is growing, was like crazy, including the millions of orders that they got on the Echo with Alexa.
Okay.
Millions and millions of orders. Millions.
Yeah, they have quite a little platform that they get to push their own products. I mean, you know, you think about it, the amount of visitors that visit their site on a daily basis, and then they get to push their own products that bring people back into the ecosystem. It's like a self-revolving door of...
It is.
Yeah.
It is. And I think, you know, when you and I were talking with Kevin about the drug, I think the drug thing's going to be a monster deal. You know, because the spread is huge in them.
For sure.
You know, you're talking about most of the larger, not necessarily prescriptions, but let's say people that are actually on a lot of drugs, you know, most of that gets done through mail order. because the way these PPOs, are set up. Do you know what I'm saying? So, if you give blood thinner medicine or, whatever you're having, that
it's a recurring product, and most of the people as well, maybe they don't have the ability to be traveling and picking it up, right, on a daily basis. If they're, older, if they're on that many medications, maybe they're not driving. So it is something that's set up that they're getting delivered at a certain time for a certain amount of money. And man, if that's not Amazon's business to deliver products on time on a regular basis at the cheapest cost, that's what they do best.
And that if you look at that, then you look at the insurance that are paying for a lot of it. I can see them negotiating those deals, and these other folks getting left in the dust. It's like, wow.
That's a market that there's margins all over the place. I assume that Amazon is willing to get in there and beat people on cost, and
they're so tiny. It's so easy. I mean, the Amazons used to deliver in big things. Imagine just delivering little pill bottles.
Right. No, for sure.
You gotta love it.
For
Pretty
sure.
wild. Let's go over and take a look at Facebook. So Facebook, okay, Facebook comes out with their numbers tomorrow after the close. Apple comes out with their numbers, I believe, Thursday after the close. Yeah.
Okay.
The difference is Apple is at 4:30.
Yes.
So what will happen, folks, if you do trade that Nadex platform, when Facebook comes out, bottom line, you can, those volatility trades that Tommy and I do with the oil and gas sometimes on a Wednesday or Thursday, that is something that can fly. In fact, Tommy, last Friday, when Amazon did come out, I didn't do the volatility trade, but man, that would have scored beyond belief. The NDX 100 went from being down 20 to up 25, 45-point spread, and then the next morning it was up an additional 60.
Man, yeah, because Amazon just kept rocking. It looks like if you look at the chart, they popped that night, but the next day they had a good day too.
Yeah, and then Google didn't stop. Microsoft didn't stop. Microsoft was up 6 points, and Microsoft, and this is what the difference is, folks, and just so you can understand that an equity that has, Microsoft has 7.7 billion shares outstanding. So it's much harder to move a stock that has that many shares outstanding versus Amazon only has 481 million shares. Isn't that wild? That Microsoft,
it is, but if you knock off a zero there, just to put things in comparison, if Amazon did like a 10-for-1 split, it would still be trading at $110, and you'd have 4.8 billion shares. So it gets a little closer, just so it does. Because dollar-wise,
I understand what you're saying. It's not 7.5 billion. Moving.
But market cap, I look at things in market cap, though, because that's all that really matters in dollar terms. So what are the two market caps of those two companies? They're pretty close, just to put, because really it's moving market cap.
So Amazon is, Microsoft is 645 billion.
Yeah, and Amazon's going to be a little bit less, I think. There is the argument for sure that it's tougher for people to afford the
531 billion.
Yeah. So they're close, in terms of, it's all what the company's worth. And so percentage-wise, moving a company that's worth $500 billion one way or the other is a big deal.
And listen to this. Watch this one here. This is Google, I believe, is beating them all. 707 billion. What was Microsoft? 750.
645, I believe.
All right, so Google is the closest to 1 trillion.
And what's Apple? Yeah.
Let's say I'm going to go to Apple right now. Oh no, Apple's the number. Apple's 860 billion.
Yeah.
That's not far away.
And I think I had seen articles recently, not even as we were this close, because they wouldn't even be, a reach at 860 billion, where, it's going to be, we haven't had $1 trillion company before.
Right.
And it's coming real soon.
Yeah, well, that's what it looks like.
Oh, Apple's only needs 10 to 15%, and realistically, I don't see that company shrinking over the next 3 years. Maybe it's not going to grow as much as it had, but they're still going to be around, and they're going to be growing, whether it's worldwide or whatnot. So they're coming. It's not, it's not the same as like, the big oil companies used to be the companies. They used to be the standard of the biggest companies. Exxon, they were the biggest company.
Sure.
And, as oil faltered, so did they. But Apple doesn't have that type of a problem where a commodity that they live and die off of is all of a sudden going to decrease in value. Technology is their commodity, and technology is going to be around. So
it is.
Yeah.
It is. Their problem could be that everyone has their product.
Yeah, no, for sure. And that's why, you might not even see any growth, not like what you've seen, but I assume if you're buying Apple shares and you're in that stock for 5 or 10 years, you're going to have more value than you had probably today.
Yeah, you're in heaven.
Right, exactly.
Stay right there, folks. Tommy and I are coming right back. Dow Industrials right now 13. Nasdaq's up 20. S&Ps are up 4.5. Right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Think or Swim. Next on TFNN.
Welcome back, folks. Tom and Tommy O'Brien. S&P's up 125.74. Dow Jones up 15, trading at 23,363. Kind of a relatively calm hour as we've been on the air. Not too much action in the markets as we pulled back a little bit off the open, but then things kind of hanging where they have been. Maybe up a tick or two, but not too much action really.
Yeah, it's crawling. I don't like that slow crawl.
It is. It is. Quite a little open and then, crawling to the upside, right?
Yeah. Let's take a look at some of the higher volume equities out here and see what we're looking at. You get AK Steel, that's getting smoked. That's down 85 cents, trading $5. GE just continues to go lower. This is like crazy. GE is down 27 cents. That's trading $20.14. You get Under Armour's a big one. That's down 265. You get Intel up $1.30. Qualcomm's getting hit. That's down 354.
Yeah. The last thing you want to hear is that Apple's not going to be doing business with you anymore when you're a chip maker.
Seriously, man. And, they've been in court forever. And, bottom line is that, it looks that, we'll find out if they can get along without using Qualcomm chips,
I'm sure they can if that's their plan, right?
Yeah, well, that's what they're going to try. They haven't been able to do it thus far, but I guess I'm not sure whether it's Samsung that's moving in there or not. You know what I mean? But it's going to be a big one. There's no doubt about that. It would be
interesting if they went more to Samsung, which is more of a competitor in the phone market.
I know.
Dave White's talked about, they're already using components from Samsung for the screens for their new iPhone 10, and then, you're going to be it's that OLED, right? The technology, yes. And then, but guess what? Samsung's using them too, and they can't produce enough. So,
no doubt. Folks, stay right there. We get swim lessons coming up next. Of course, then we're going to our man, Mr. Basil Chapman, Steve Rhodes, Dave White. We'll be back this afternoon. Of course, our man, Mr. Andy Heck. Tom, have a great one, a safe one.
You too, man.
Stay right there, folks. We got swim lessons coming right up. Dow Industrials up 15, Nasdaq up 21, S&P's up 4.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.